few more of these, and I'll really get interested in buying some more emerging market stocks. Not yet, it's too early, but progress. The progress is that on July 10th, JP Morgan Chase came out and said underweight Brazil and Indonesia. Underweight is sort of the Wall Street asset allocation term for sell. And I really like this. It's not that there are no problems in these two markets. There are, in fact, tremendous problems, especially in Brazil. Brazil right now is looking at a struggle to get growth above 2, not going to make it. Runaway inflation up near the top end of the Bank of Brazil's central bank's inflation targets. Massive protests in the streets about the quality of education, the quality of public transportation, about inflation. All these things going on with the Brazilian real sinking like a stone, which of course leads to inflation and is challenging a lot of Brazilian companies in their balance sheets. So all of those things are really bad. I mean, it's not a time to put money into Brazil. What you'd like to see, though, and what is happening, is you'd like to see all of that bad news priced in. So what you want is for lots of people like JP Morgan Chase to go out and say, underweight, underweight, so the market sells off, and hopefully you're sitting on the sidelines. I'm mostly out of Brazil. And so that you then get to say, okay, there are bargains that are developing, and at some point down the road, all of the bad news is priced in, you can buy. Indonesia is not quite as bad off as Brazil, but it's still, you've got a rising dollar, you've got growth, slow growth in China. Indonesia is exposed to both of those. You've got an economy that's struggling to figure out what to subsidize because you've got a lot of tremendously poor people in Indonesia who really only get through their lives on government fuel subsidies, for example. The government, huge expense for the government, would love to cut them, not sure it can. So, it's not a great time for Indonesia either. Indonesian stocks are pretty expensive. The Indonesian economy has been one of the big growth stories, attracted a lot of money, which is now flowing out. So what you'd like to see is these stocks go down in price to a point where all the bad news is in. I don't think we're there yet. JP Morgan Chase coming out and saying underweight doesn't yet really, I think there's one more downward leg in fear of China. I think when China breaks below 7.5% growth, if it does, and I think it probably will in the next quarter or two, we get another leg down in people's feelings about emerging market stocks. So what we're seeing is a movement really to, dislike of emerging markets, and I think that's justified at this point. What you'd really like to see is a movement from dislike to hatred, despise, and that's when you see the kind of values that give you a chance to buy into what is a long-term story. And remember, this is still a long-term story. These are the economies in the world that are growing faster than the developed economies, but you want to buy it at the right price. And I think there's somewhere down the road, maybe in the next quarter or two, when you'll be able to say, okay, this is the time to put these back in my portfolio or to add stuff in this category to my portfolio. Not yet, but I see it coming. This is Jim Jubak for Jubak Asset Management.